Hello, good afternoon. You're watching Market Fatafat on ET Now with me, Vinny Motiwal, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. But market seems like, after those highs have given up and today just extended the fall as of now, almost in the day's lowest point.
Absolutely, Vinny. In fact, the indications were earlier on only that we will be in for a weak start. That's what GIFT Nifty had indicated. And that's how actually it's transpiring. Now we are near the day's lowest point when it comes to the benchmark indices. We are testing that 22,000 levels. Remember the fact that we have seen a spectacular rally coming in for the benchmark indices over the last few trading sessions. So right now, a bit subdued coming in for the benchmarks. If you look at Nifty Bank, that one also has given up all of its gains, trading lower but flat with a negative bias. So that's the way how the markets are looking like at this point in time, Vinny, near the day's lowest point for the benchmarks.
Absolutely, near the day's lowest point. Nothing exciting that's happening here. But let's get started with the first stock that's been in focus today, that's been actually falling in trade, and that is Angel One. Now, they reported their numbers as well, and what we're seeing is that the stock actually fell as much as more than 10% intraday today as well. And this is because of the weak set of numbers. Margin contraction, that was a major factor that came in there as well, a sharp contraction in terms of the operating margins. And when you look at the operating margins, they came in at 37.6%, which is a decline of 575 basis points on a year-on-year basis. So yes, nothing great in terms of the numbers that came in, mainly due to higher operational expenditure, due to the increased client acquisition as well. And that was the main reason which dragged the profitability, and that is why the fall in the stock price today as well. As of now, at the day's lowest point, down 13%.
All right, let's shift focus then and let's put the spotlight on a PSU company, that is MSTC. That particular counter is buzzing in today's trading session. You have a brokerage note for Monarch Net Worth, which is seeing e-commerce companies stock to more than double, backed by its near monopolistic status in the metal scrap auction. So on back of that, you saw a sharp uptick coming in on the share price. The stock actually saw an uptick of as much as 6% or so on an intraday basis, hitting an all-time high level, and the target price as set for this particular counter is around 1,726 rupees per share. So the fact that you have the brokerage giving a thumbs up, also raising the target price for the counter, you've seen a sharp uptick, hitting a fresh record high level. That is MSTC for you.
Okay, let's move on and talk about stock number 3 for today. We have RVNL, which is trading at its all-time high near those levels as well. And the company has emerged as the lowest bidder for rupees 251 crores, a Jabalpur project. Now, on the back of that, the stock has been buzzing away in trade. Yes, as of now, given that the markets have fallen as well, of those highest point of the day, putting on to some bit of a gain of 0.1% in trade. Now, when you're looking at it, the order is mainly in Madhya Pradesh. That is there. It includes supply, installation, testing and commissioning of 11 kV line associated works. And on the back of that, we've seen the stock actually see a sharp spike up in the morning. But as of now, with the market seems like it has given up some bit of its gains.
All right, let's put the spotlight on Federal Bank. Then that particular counter is in focus in today's trading session because it has come out with its earnings. And if you look at the way how the numbers have panned out for the gross NPA or for the net NPA, in fact, the net NPA is unchanged on a quarter-on-quarter basis, but it's the gross NPA levels that has actually come in as substantially higher or tad bit higher on a quarter-on-quarter basis. So that is Federal Bank for you, and we will be joined in by the management very shortly now.
Well, it gives me great pleasure now to bring on board Shyam Srinivasan to understand how things have transpired for Federal Bank for the quarter gone by. What is the way forward, and how will FY25 be different from FY24? Now, Shyam, good afternoon. Thank you for joining us. Let's first understand the big picture here. And the big picture here is that Federal Bank continues its growth momentum. It is growing at a run rate which is higher than the industry average, and the CASA numbers, I won't say enviable, but they are rock solid.
Yeah, Nikunj, the first and I think the key point for quarter 3, you may have observed, the first time ever the bank hit the 4-digit quarterly profit number. We crossed 1,000 crores of net profit in Q3. Sequentially, it's been 854 first quarter, 954 second, and this quarter was a record number of 1,007. And this on the back of a fairly strong FY23. 24 looks like on course on all the key metrics. The bank has been seeking to work on. It is a tight market for all players. We've held out quite well. And I do believe this momentum of ROA and ROE expansion should continue as we look into either the last quarter of this financial year and or the next financial year. The dynamics are quite, and I think the bank is fluid enough to readjust to market realities. So on balance, I think we are on course to delivering what we set out to do a few years ago, sequentially improve our ROA, an annual improvement of about 10 basis points every year. I think we are on course for that.
Shyam, we always look at the aggregate book, and with Federal Bank, we've never discussed this point. So let's take this opportunity to understand that the growth in Federal Bank, how much is coming from your hometown Kerala, how much is coming from South, and how much is coming from new areas? Because for me, that's a real parameter of growth, that you are no longer a old private South-based franchise. You got your wings which are now spreading.
No, thanks, Nikunj. I think I do want to believe we shed that tag of an old generation bank a long while back. But that said, we have a very marked presence for the reasons we were founded in Kerala. Our deposit franchise is rich here. Our credit book over the last many years, and in particular the more recent years, has been substantially growing across the country, very diversified. Our branch network today, as I speak to you, is about 1,414 branches, and out of which 820 branches are peppered across the different parts of the country. About 590 are in Kerala. Our business origination has been 75-80% of our business comes from all across India, other than our home market. So I think this tag of old or regional has been long shed, and I hope that's visible in all our outcomes. We set out to be the most admired bank many years ago, and I do want to believe that that momentum is sort of relentlessly progressing. Our digital capabilities match the best in the market, sometimes even ahead. And in some ways, these are playing out in all the initiatives of the bank, be it new offerings, new geographies, new products, and most importantly, growth being evenly spread across many of our geographies. There are some core strengths which we should preserve. We are a magnet for non-resident Indians to bank in India. We bring in about 20% of the India remittances that come into India. Initially, it was just the Middle East, Kerala. Now it's non-Middle East, non-Kerala, Middle East, non-Kerala, all quadrants working in favor, and we think we are getting a good traction on that. So on balance, the bank is now sort of as widespread, as prominent as we would like it to be across many geographies. Yes, Maharashtra, Tamil Nadu, Karnataka, parts of Gujarat, and parts of the north, we have much higher presence compared to our past, and those are showing through in the numbers.
Shyam, when I spoke to the SBI chairman, he gave us a very simple thumb rule that at his size, his growth would be nominal GDP plus 2%. If we have to use the same thumb rule to understand your growth rate for FY25, can I say that it will be nominal GDP plus 5 to 6% at least?
Yeah, we could safely say that, Nikunj. I think if you see, barring the COVID period, and even if you take that into our calculation, the CAGR for Federal has been well north of 15 to 16% across an 8-year period. To back COVID out, it's probably 18%. And if you look at the industry, it's grown in the 12-13%. So we are at what, 500 basis points to 600 basis points higher than the industry growth, which in some sense is the number that you are also pointing out to be. And I do think that momentum is there. If you take the last 6 quarters, it's been 18% plus.
Shyam, so let's look at a 20% hurdle. If you grow at 20%, which means rule of 72, I'm breaking it just for the benefit of our US simplification. Rule of 72, folks, is that you divide the growth rate with the number of 72, which means every 3.5 years you will double. Is that a very reasonable assumption that every 3 to 3.5 years, bare minimum, Federal Bank would double?
Yeah, you sort of hit the nail, rule of 72. We keep saying if you grow at 80% every 4 years, the book should double. And if you cut back over the last, say, we were today, as we exited December 23, the overall book of the bank is about 4.4 lakh crores. And we were under 2.5 lakh crores exactly about 39, 40 months back. So that should be extrapolated. Yeah, there will be seasonality in, there is caution to banks are being advised to be more thoughtful about credit expansion when the weather is sort of rough in some parts. So anything to expect 16 to 20% growth through this period is very possible. So to expect Federal to be doubling over the next 4 years, I think is quite on course. It's on almost exactly what our internal aspirations and our commitment to our board and our ourselves is. So doubling the bank over the next 4 years should be very possible. And importantly, it's not just doubling. I think it's profitable doubling.
4 or 3, because that 1 year from a stock market standpoint matters. Because you are growing at a rate in which, technically speaking, 3 years you should double. So if I say 4, that's a reasonable assumption. If I say 3, will that be an optimistic assumption?
I would only track one line, and that is that certainly we would like it to be 3 and a little above. But I think given the caution that's being exercised all across, we have to be a little thoughtful, because I think the markets are getting tougher in the deposit space. So, through that period. But I think if you take a longer horizon, 3.5, 4 years, we are very much on course. But I'll add quickly, Nikunj, the priority is to make sure that this is all a sort of really profitable growth. And that's what makes us very happy. If you take the last 4 years or, any slice of time, I think when we were at a 0.7% ROA, we had said we will double it in a 5-year period. I'm delighted that as we speak today, we are bang on that. And I think at 1.4% ROA, we start competing with amongst the top 5-6 banks in terms of sustainable. And I think on the margin, our rate of growth has been more credible than many others.
Will you stop at 1.5? Is that the maximum efficiency you can squeeze, or 1.5 could eventually head towards 2?
I often say that let's get to 1.5 and we'll tell you why. I think the endless arbitrage that some players will have to be in the 2 spaces slowly getting to be squeezed out, Nikunj. I think it's 1.8 would be the top of class, and 1.5, 1.6 will be the next breed. We seek to be in that 1.5, 1.6 shortly, and then work our way up to the 1.8. But in that zone, I think the trajectory is important. We are on course. We are at about closer to 1.4, 1.39 this quarter, and on course to keeping that going.
But is looking at understanding the Federal Bank. I'm going to address this on behalf of, let's say, our viewers and for investors. I have maintained a view that, the stock is getting a stepmotherly treatment. For a franchise which makes 1,000 crores of profit, and with this kind of an ROA, should have a better price to book. Now, that is a function of perception, and perception is a function of stability and continuity. So can I say that on the NPA front, allow me to make the structure for Federal Bank. We are looking at bank doubling in 3 to 3.5 years, ROA between 1.5 to about 1.8%, and NPAs which would be definitely in and around 0.5%. Can I say that that is the template for Federal Bank for 3 years? I'm making life miserable for a lot of brokerages who perhaps have less hard work to do, but is that the fair assessment?
I think, your assessment on all the direction vectors are perfectly bang on. We are renowned for our quality of portfolio, and I'm happy through this period also our book is holding out quite well. Our gross and net have been sequentially improving, year on year improving. Our credit costs are enviably low. It's at about 30 basis points. We seek to keep that as our sort of benchmark number. At 30, 35 basis points, we would probably be amongst the best in terms of credit costs. So if our trajectory in the high teens credit growth, credit costs at about 30 basis points through the cycle, I believe 1.5 ROA is something that is on course. And with that, I think some more initiatives or higher margin businesses that we're launching should take us to the next wave.
In general, when interest rates are peaking out, I was talking to one of your peer bankers and he said, CASA is the new gold, oil or Bitcoin, whatever you want to call, but that is the importance of good liability franchise. Don't you think it will be a struggle to maintain NIMs around 3%?
Around 3% won't be a problem. It's in the mid, sort of 325 to 330 and a little more is where the near-term challenge is. But as you notice, our book is getting pivoted to some of the higher yield businesses, and we haven't had large share of that. I do think over the next 2 years, given the momentum we are seeing in these businesses, the higher yield businesses will start getting a higher share of our overall business. We have a sort of risk appetite framework within which is what we are playing. I think around where we are right now, 3.2, 3.25 in a steady state is possible. Yes, there will be some periods where interest rates start trending down, so some books get readjusted, recorrected. But I think through the cycle, 325 is where we think we can. I wouldn't go as low as 3 and in the near term.
So can I say that for next 3 years, as of now, there is no fog in the windscreen? This famous line from Mr. Narayan Murthy. There is no fog on the windscreen. All the fog is in Delhi. There is no fog when it comes to Federal Bank's 3-year target.
I think our wipers are in a good drive through fog without accidents.
Okay. Now allow me to be curious. The fact that you would be completing almost 15 years in September. You built a franchise which is built to last. And I'm sure as the CEO, you are thinking what is next for Federal Bank. And without me prompting, I'm sure the plan is already in place. Markets are curious to know what's next for Federal Bank. I mean, you've been the face, you've been the change agent there, you've been the leader, you've glued a lot of things. What's next now? Is that a fair assessment if somebody is curious?
I think we've been candid when the regulators advised us to execute our succession plan. The board put out the message. There is a process underway, and well before the deadline, we will share the names with the regulator for them to approve and sort of appoint. But I added only a few minutes back, and I'm glad you picked it up. We are built to last. I think we've had for about a year plus been mentioning we have a very strong succession internally. For choice, the board will look from outside as well. And we bat quite deep. We have a good team across the spectrum. And through last 4-5 years, one of the wise things we have done is we've created a senior management team which is spread across different geographies and not sort of polarized in one location, whether it's Mumbai, Kochi, wherever. We have Mumbai, Kochi, Delhi, Chennai. All our seniors are peppered across these places. We represent the geographies we are present quite nicely. So I think depth in the senior team, unarguably there. Board continuity is very strong. And I genuinely want to believe we've built something that is transcending individuals and across time. So my conviction is that FY 25-26 will be even better. Yes, I've had the opportunity to be around for a long while, but I'm sure it'll be only better.
Well, you've given this launchpad, Shyam. I think that's incredible. I've had the pleasure of tracking your journey at Standard Chartered and now with Federal Bank. So it's quite incredible the way you've cemented a lot of processes into place. My final question is that I'm going to pick it up from your answer that you are open to an external candidate also. Now that leads to speculation, but also excitement. Speculation for shareholders and excitement for press.
Well, the process is on. All I can say is that the board is running a very elaborate search process. It's just commissioning. Like I always said, there are two very prominent individuals in the team who are exceptional caliber, but the board for choice will look around. Hopefully in the next 2 months or so, there will be a good slate to choose from.
You are confirming to us that there is a probability and a possibility, and you're open to the fact that there could be an external candidate.
Yeah, all I can say is that the board is very much in the process of identifying the most suitable for the job. I also add that we have very capable internal. So, I think as they say, the best man or woman will get the job. The good thing is the job is attractive enough for very, very talented internal, external to want it. We couldn't say that a few years back.
No, I mean, I like we've been discussing, sir. I mean, you look at Federal Bank, 1,000 crore, and if you assume that is the new normal, then we are looking at perhaps Federal Bank becoming one of the most profitable bank outside Nifty 50. So in my assessment, if I say that Federal Bank is on course to perhaps become the most profitable bank outside Nifty 50, I think I would be correct. What do you think? I will be wrong, I'll be correct.
Two things. You will be right, and I wish we enter the Nifty 50.
So just to Just to wrap it up with one final point. FI post-COVID, it was about survival. Banks had to survive. Then it was revival. CASA started coming back. Ratios started improving. Can I say that now it's the time of flourishing for Federal Bank? Next 3 years, we would see more earning beats and we will see more surprises.
I'll just add to your survival, revival. If there's a word called thrival, it will be that.
Also good to hear that, and good luck. And I've been told that you come to Mumbai every week now because your business has really become big in this part. So next time, hopefully in our studio.
Thank you. Thank you very much.
Thank you very much. Ladies, back to you.
Absolutely. So yes, that was a very, very interesting chat that we had on Federal Bank as well. Next 3 years, we could see obviously doubling in terms of growth that is expected on that front as well. 3.5 to 4 years is what we could be expecting on that front. 1.8% ROA is what the management is highlighting as well. As of now, Federal Bank trying to make a slight bit of an uptick or a recovery, but nothing much. But yes, 1.4% downtick is what Federal Bank is at. Let's move on to the next stock that is in focus today. We'll talk about is PNC Infra. Now, the company and its subsidiary PNC Infra Holdings have executed a definitive agreement with Highways Infrastructure Trust to divest 12 road assets in Uttar Pradesh, Madhya Pradesh, Karnataka and Rajasthan. So because of this, we've seen PNC Infra today that has been in focus as well. And that's one of the stocks that we are highlighting today. As of now, seeing an uptick of almost 3% in trade.
All right, so that is PNC Infra. Last stock to discuss in this edition of Market Fatafat. Thank you so much, Vinny. Along with we had the management of Federal Bank, not to forget also the team of researchers and also the technical analyst Osho, who was waiting by patiently. But we've come to the end of this show, and as we wind down this edition of Market Fatafat, Maharashtra continues its momentum at the World Economic Forum meeting 2024 in Davos. Here's a look at the investment opportunity the state is ripe for.
As the state that contributes the largest gross state domestic product and 14% of India's total GDP, Maharashtra prides itself on being the heart of commerce in the country. And out of the almost 80 lakh crore rupees of foreign direct investment that have entered India since the turn of the millennium, 30% has flown into Maharashtra alone. The state leads in industrial manufacturing and has invested significantly into developing infrastructural capacities and progressive policies to further the national ambition. A mature infrastructure of 4 international and 13 domestic airports, 2 major and 48 minor ports, and the country's largest power capacity is dedicated to facilitating sectors like aerospace, automotive, electronics, IT, pharma, textiles, among many more. This year, at the snow-laden picturesque Swiss city of Davos, the eminent leaders from Maharashtra are pitched to represent the state at the world's largest economic thought leadership program.
मैग्नेटिक महाराष्ट्र जो है वो जून के फर्स्ट वीक में महाराष्ट्र में हो रहा है और उसके पार्श्वभूमि के ऊपर अभी डावोस का ये दौरा है। मेरे ख्याल से सबसे ज़्यादा अभी तक के सबसे ज़्यादा एमओयूज डावोस में मुख्यमंत्री एकनाथ जी शिंदे, उप मुख्यमंत्री देवेंद्र जी और दूसरे हमारे जो उप मुख्यमंत्री अजित दादा है उनके नेतृत्व में वहाँ होंगे। हमारा ये डावोस का जो दौरा है वो हिस्टोरिकल रहेगा। इसमें सबसे ज़्यादा एमओयूज होंगे और हम ये साबित कर देंगे डावोस में कि महाराष्ट्र एक नंबर पे है। महाराष्ट्र की लैंड बैंक बहुत बड़ी है। महाराष्ट्र वाटर सब्सिडी दे सकता है, महाराष्ट्र इलेक्ट्रिसिटी सब्सिडी दे सकता है, महाराष्ट्र में और बहुत सुविधा हम दे सकते हैं। और मेरे ख्याल से जो पिछले 3 साल पहले महाराष्ट्र ये 3 नंबर पे था एफडीआई में, वो अभी 1 नंबर पे है।
Maharashtra, the industrial linchpin of the Indian economy, is poised to shine at the World Economic Forum meeting 2024 in Davos.